How do I refix my mortgage? My name is Jackie Elias and I am the CEO at FutureBound, where we help you get financially and mortgage free. We have mortgage advice, online courses, and financial education to help you build generational wealth and build a strong foundation so you can build the life of fulfillment that you want and deserve. So if you like this video, like, follow, subscribe. Enough about me, let's get into it. Well, 90% of our clients come to us with a structure of their mortgage that is completely wrong for them. They're paying too much interest. It's not based on their financial goals or any strategy. It's basically probably just what someone at the bank told them to do, or maybe it was a well-meaning family member, but they didn't fully understand what you're wanting to do with your mortgage. So you need a strategy for your mortgage, and that is the same when it comes to refixing it. Okay, so you need a refix strategy. So I'm going to give you 5 tips for you to think about when it is time to refix your mortgage. And actually, one of them might mean you actually don't refix your mortgage. Tip number 1, decide whether or not you need to refix or refinance your mortgage. When a mortgage comes off a fixed term interest, then it is a great time when your mortgage is on floating where you can change something about your mortgage. So it might be you want to change banks completely. Now, in the environment with high interest rates, you might be thinking, why would I even go to another bank? They're just going to have high interest rates. Well, the answer is there might be other things that they might provide you. Even if the interest rate is about the same, another bank might give you some other perk to attract you. Okay, so consider whether or not that might be better for your situation if you get some other perks at a different bank. Tip number 2, another way that you can change your mortgage when your mortgage goes onto floating is to restructure it. What do I mean by that? Well, many homeowners in New Zealand have either 1 or 2 really big fat mortgage loans, right? But you can do different things with it, right? You can change up how many loans that you have. You can change up the types of interest that you have on loans. You can do interest only, you can do fixed, you can have floating, you can have offset account, revolving credit, okay? You can kind of make a little masterpiece. Now, remember, you need an actual strategy for your mortgage, right? So you need to, at the time when your mortgage comes off of fixed interest, you can say, actually, I want to implement a strategy where I am decreasing the amount of interest that I'm paying by using the right structure for my situation. Again, the structure for you is going to be dependent on your financial goals, your priorities, your values, and what are you actually trying to achieve with your finances and with your mortgage. Tip number 3. The question comes up quite a lot. How long should I refix my mortgage for? Okay, in this scenario, you actually decided it's better for me to refix my mortgage and stay at the same bank and just put it on another fixed term interest. So how long should that be? Should it be 1, 2, 3, 4, 5 years, right? And so many people might just think, well, obviously I want to pay the lowest amount of interest as possible. So the logical decision might be to put on the lowest interest rate. Well, it really more depends on where do you think the market is going? Where do you think interest rates are going? If you put your mortgage on 1-year fixed interest, are the interest rates, do you think they're going to be higher in a year or they're going to be lower in a year, right? Obviously, you want to try to catch the lowest interest rates as possible. And so if you think that interest rates are going to be lower in a year from now, then fix your mortgage for a year, and then you can take advantage of the lower interest rates instead of being on a high interest rate for longer, 1, 2, 3 years, right? If you think that interest rates are going to be higher, then you're going to fix it for longer, right? You're going to fix it for a longer amount of time so you can hopefully catch that mortgage instead of in a year where you think the interest rates are going to be higher. Maybe it'll be 2 years from now, right? So you're going to fix it for 2 years at the rate that you think is lower now, hoping that you're right that the interest rates are going to be higher in 2 years and it will be higher in a year from now. So you want to keep the lower interest rate that you have now for longer. Tip number 4. what is your repayment strategy? Okay, so a lot of these decisions that you're making depends on whether or not are you planning just to pay your mortgage for 30 long, hard years, or are you actually going to put in a strategy to pay it off faster? Okay, so obviously when you're paying less interest, you have an opportunity to implement a strategic and intentional repayment strategy where you can pay it off faster in 7, 10 years, 12 years, right? Like pay it off and not pay so much interest, saving yourself hundreds of thousands of dollars, 200, 300. We're seeing clients saving $400,000 implementing a strategy that reduces their interest and a repayment strategy at the same time, right? So are you trying to pay your mortgage off faster and have extra money to provide your kids with the life that you want? Are you wanting to travel, different things like that, so you can be able to better your financial position earlier instead of paying your mortgage for 30 years? So what you decide to do when you refix your mortgage is dependent upon what are you doing for your repayment strategy. Tip number 5. This is so important. Who is going to advise you when you refix your mortgage? Okay, you need to decide, is it going to be the bank again, or is it going to be a mortgage advisor? Is it going to be a family member? Who is it just going to be you and your logic? Who is going to advise you? Now, obviously, we have mortgage advisors here at FutureBound, so we advocate for using a mortgage advisor. Why? Well, let's think of the options. In the bank, most of the people that you're going to be talking to about your mortgage do not have much more knowledge than you do about your mortgage, okay? They're not going to consider your financial goals. They're not going to consider what your repayment strategy is. Obviously, they're going to want you to pay it for 30 years or hopefully more. If you keep putting on short-term debt or anything on your mortgage, you might be paying it for much longer. You aren't going to get the advice that you want based on your situation and the things that you want from the bank, okay? Family members, again, they're well-meaning, but they may not fully understand the full picture. They may not understand your financial goals and the best way to get there. So definitely use a mortgage advisor, and particularly a mortgage advisor that understands how to reduce interest and pay your mortgage off faster, or whatever your financial goals are. Now, if you really are interested in this and you're like, please help me, I'm refixing my mortgage and I want to make these decisions, download our ebook that's going to help you reduce mortgage interest when your fixed mortgage is expiring. Okay, you're going to find out the mistakes that homeowners make. You're going to find out insider secrets that we put inside of this book to help you reduce your mortgage interest, and you can be able to apply it to your situation. Click the link, fill out your information. This ebook, it's brand new. We're well aware that many people are feeling the pinch, and we want to help you reduce your mortgage interest. So download this book. It is free for now because this is quite valuable information that we usually only give our clients. So this is something that you can download now and be able to get one step closer to living a life of fulfillment that you want and deserve.
For more financial tips, advice, and education, subscribe to us on YouTube, and don't forget to hit that notification bell.